right? I'm still using the same screen from the other blog video because at this point, they are almost the same video. So I titled the recording about the same time. We are looking at supply and demand. Now for supply and demand, what do they mean? They almost mean the same thing as other blogs, but other blogs, I said, the areas where Visio take their orders from, while supply and demand are areas where orders gathered. Now, these are areas where orders are gathered. In most times, these are areas where we call sideways on smart time frame, sideways markets of consolidation here. Consolidation. These are areas we call consolidation, right? These are areas we call consolidation. If you are looking at a chart, I'm still on the same chart, so don't mind most of the drawings you'll be seeing are repetitive. If you're on a chart and you see area of consolidations, those are areas of supply and demand. So you see areas like this. These are areas of supply and demand. That's an area of demand right there. This is an area of demand, right? This is an area of demand. So what are areas of demand? What are areas of supply? Let me look at it. Let's look at it this way. Supply equals to resistance, okay, at the top, while demand is equal to support because it's at the bottom. All right, so let's just okay that. So like what we are looking at here, this one's at the bottom, so these are demand zones. All right, these are demand zones. Look at how the consolidation happened. Demand, consolidation, demand. Actually, what we see as consolidations are areas where these big institutions are actually gathering orders. So when they gather the order, the market flies, they try to take everybody out of that order and then move in the direction they actually really want to move. So let us look at more areas of position like that. Right here, you can see that that's supply. That's supply out there. You can see it. Here is an area of supply or demand, what I call it. Yes, demand. Another one is here. Meanwhile, there are indicators that you can use for that. So just quickly map out some area of supply and demand on your chart. I actually don't use supply and demand anymore because they might actually be very confusing, except for supply and demand flip, which I'll be showing in subsequent videos as well. All right. So when you go to indicators, you can just search for supply and demand to actually give you something volume-based supply and demand. Look for something like this and then click on it. Right. And as you can see, it gave out all those areas as supply and demand. Now, the reason why it doesn't look neat is because we're on the 1 hour time frame, and this is possibly picking other block or supply and demand areas. So you double click on it. I'm sorry, you go to settings here, not double click, and then you set the hour you want it to be. So time frame is on 15 minutes time frame. So set a 1 hour time frame, and it is going to adjust exactly. Now, these are areas of supply and demand that the tool has given to us. So you can use all these areas to look for quick trades if you understand how to use it to trade. Personally, I will not advise you to use it because I don't use it. I don't understand it again, which I used to. I don't understand it anymore. So it gives you those automatic areas, all right? But you can take it out if you can easily use your eyes to identify these areas, okay? You can just take it out. You can see area of demand, supply up there, area of whatever up here, just creating those areas neatly and nicely, all right? Creating those areas nicely for everybody to actually see, okay? So, so I can take that out, just blind it, okay? I can take that out, just blind it, and that's about supply and demand. Now, what is the objective frame behind supply and demand? And then I will go over the sub-objective frame of order blocks. Why order blocks? Now, the subjective frame for that demand and supply is the fact that the market makers are trying to gather orders. And definitely, when they are gathering orders, they are trying to collect money from Mr. A, B, C, D, E, F, G, and it's going to the market, going to the market, going to the market. Now, they need a particular amount to actually move the market to the direction they want to move it to. So let's say they want to move it, they want to go long, right? They need $10 billion to move the market up. They would not just move the market up with $10 billion like that. They begin to pump in 50 million, $10,000. You know, that is what creates that consolidation. The sideways movement, that up and down rapidly within the time frames that you can be looking at. Okay, so monies are going into that point, and the bigger time frame, the bigger the institutions that are running on that time frame. Those smaller time frames, we have smaller institutions that are running there that are actually misusing the whole moves, right, and manipulating you out of your trades. All right, so when the orders are, when they are packing the orders, they are buying and selling, buying and selling, buying and selling, buying and selling, making small profits within all these areas, and they are marking that area as a key zone for them to come back to. So as soon as they realize it now, at this point, the market already ready to sell. Right at this point, if you look at the market's behavior here, multiple rejections, right? And finally, multiple rejections. A lot of people would have tried to sell from here. And then they first of all push the market up. You know, this will be a loss for them. They want to sell the market here already, but they first push the market up. This is a loss for them. As you can see that push, you know that it's a massive push to take people out. Exactly. They took a lot of people out of their stop loss. No matter how you are doing it, your stop loss will not reach the stop. So that's exactly what they did. Push people out because they really wanted to sell the market from all these points here. They really wanted to sell the market from here. So they pushed the market up. Now you ask me, how did I know multiple rejections on the consolidation areas, right? On the area of supply of supply right there at the top there. So pushed up, they came back into that area of supply, right there, area of demand, pushed up a little. As soon as they came back into this point, they took their profit at break even, right? That is no loss, no profit. They came back to where they gathered that order. Okay, so no loss, no profit. Push it up again to manipulate people, push it up again and took everybody out to create that sell. That is why I said we are most likely going to see a sell from this point, according to what we are seeing in the market right now. So basically that's it. And for other blocks are created about the same way. Manipulatively, they run a trade into loss and then they come back to the entry to pick it. So that other block is where they are coming back to actually pick the real trade and then take it to the direction they want to take it to. That's the major objective behind supply and demand and other block. I don't want this video to be long. That's why I'll be stopping here, and I would like to see you guys in the next video. If you have any questions about this video, more about other blocks, please come into my DMs and ask. We will gladly set a time and go through it. So I see you guys in the next video. Bye.